Ira Epstein with your morning flash update, and this update is for Friday, the 3rd of June, 2022. Time right now, 8:25 a.m. Central Time. So here we are looking at a market, and today is the all-important jobs day. So let's go there and we'll come back to the markets. Here's the headline number, 70,000, almost more than the market was looking for. So what does that number do? Let's stop there for a minute. That number says this. Where did those jobs come from? We saw that the private sector added 333 jobs, so 333,000 new jobs, and the government also added more jobs, 57,000. What else? Participation rate went up to 62.3 to 62.2. It's staying similar. You're bringing back a few more people, and they're not demanding overall hourly earnings to dramatically go higher. Now, when you look at the expected hourly earnings up 0.4, they didn't come in quite there. So what is happening is you're going to hear the analysts saying that the market is seeing more people coming back to the workplace. That'll take off some of the pressure that we have, and I think they're correct. Some of the pressure coming off on wage growth. That becomes the Goldilocks scenario because it allows the Fed at the same time to continue to fight inflation by raising interest rates, more people working. The hit to the economy won't be quite as bad. That's the term Goldilocks. Get ready for it. I've given you the nitty-gritty in it, and that's pretty much it. S&P Global Group is going to give us the May service sector PMI. That's going to come out at 8:45, and the ISM is going to release their service sector indices, and that comes out at 9 o'clock. But the key number is the one that you see right here. So what did it do to the market? Well, it puts pressure on the market, in the stock market. Why? Because it says to the Fed, the economy is strong enough to withstand a series of rate hikes. It'll probably get today, as Ms. Lael Brainerd talks, and our Fed Vice Chair speaks this morning in about an hour or so. And she yesterday was saying that she's all systems go, even for a potential September hike of 50 basis points. Well, this just gives them a clean runway to do that. Energy prices staying well bid. Bonds and notes, you would assume the market's now going to go into a new trade range. I think you're going to end up now, instead of getting down into the 274, 290, 295 range, going from the high 2.8s to the 3.2 range. So start looking for that to take place. In the grain markets, more of a sell-off taking place. Good weather, warm weather, ideal growing conditions going to weigh on the market. In addition, you're getting closer and closer to hearing that June 8th date where Russia meets with Turkey to try to figure out how to open the corridor for grain going out of Ukraine. That's important. That's more world supply. Copper probably way too high in that jump yesterday. He's got to give back some of that. Platinum staying up in the market, though. This is China. China's coming back to the marketplace, and you watch. You're going to get more and more talk about them. What do they do to stimulate their economy? That's probably coming as well. The dollar, okay, it got a bump off these numbers, but it's probably just going to sit and wait. These markets all have to decide what to do next. It's one of these job numbers that keeps everything going the way it is. It's going to hurt demand. Demand relates back to company growth. Company growth, our stock indices. I would expect that we stay in the bear camp for quite a while in the stock market. I know a lot of people think, oh, that's not going to be the case. Okay. I'm of the other school of thought with that completely. Now, we're getting a lot of response to this pivot point formula. Let me explain what this is. You get days like today where the market's all over the board. You know, it starts off one way, goes another very quickly. One of the things that happens is you develop a certain high and low range from the day before, right? That creates the volatility. You see that. And you take that, and there's a formula that you find a midpoint of the day and sell zones above it, buy zones under it. It's called a pivot point. It's been around for a while. Your charting service most likely has it on it. You probably don't know how to work with it. You don't realize how many people follow this. It is popular. So what I did is I created a 3-part series for you that ties together the pivot point with momentum, teaching you how to use the two together. Is it worth looking at? It's free. Of course it's worth looking at if you're a serious chartist. For those of you that, I'm not going to spend any time, don't even bother with it. But if you're looking to see what the pros are doing, be it in the stocks, the ETFs, the futures markets, this is a vehicle that is very, very popular. You probably need to learn a bit about it. What does it hurt? All you need to do is go to our website, and on the website, under free offers, you will see this. You can also follow this. Just take your cursor, move it right up here to the top. You'll see from there an icon appear, click on it, and away you go. I'm Ira Epstein. Remember, I will be putting out your weekend edition where we'll review all the charts that I like to cover with weekend looks at them. Probably going to mix things up a little bit this week, too. You have a good day. I'm Ira Epstein.